Picture a 71-year-old woman walking into the local bank branch she's used for 20 years. She wants to check on a savings account she opened specifically for emergencies. She hasn't touched it in 4 years because, well, she hasn't had an emergency. She hands the teller her ID. The teller types for a minute, frowns, and looks back up. "Ma'am, that account doesn't exist anymore." She assumes it's a computer glitch. But it isn't a glitch. It isn't a scam. And it isn't a bank error. The bank deliberately closed her account, emptied her life savings, and handed every single dollar over to the state government. And under a quiet set of laws operating in all 50 states right now, they were completely legally allowed to do it. If you are over the age of 65 and you have a rainy day fund, an old savings account, a CD, or a safe deposit box that you rarely look at, you are the prime target for this. Millions of older Americans are having their own money legally confiscated by the state under a process called escheatment, or unclaimed property. And the reason it happens is terrifyingly simple. You did exactly what your parents taught you to do. You saved your money and you left it alone. My name is Walter Barron. I am an estate attorney, and for over 15 years, I've sat across the table from seniors trying to hunt down money they spent a lifetime saving, only to find out the government quietly swept it away. Today, I am going to show you exactly how this silent trap works, the tiny everyday mistakes that trigger it, and the one 60-second move you must make this week to make your accounts completely invisible to this sweep. Plus, I will show you how to check a hidden database to see if the state is already holding your money right now. Do not click away, because the clock on your savings might already be ticking. Here is the most painful part of this entire situation. The people who lose their money to the state are almost never careless. They are exactly the opposite. They are the most responsible savers in the country. If you grew up in the 1950s or 60s, you were taught a very specific rule about money. Put it in the bank, let it earn interest, and do not touch it unless there is an absolute emergency. You treat it like a vault. So, that is exactly what you do. You open an account, maybe put $10,000 or $20,000 in it, and you go on living your life on your Social Security and your pension. You do not log in online. You do not make withdrawals. You just let it sit, feeling secure knowing that it is there. But here is what nobody ever sat you down and explained. The banking system today is not built for the way you were taught to save. The system relies on constant, digital movement. If a computer algorithm sees an account sitting perfectly still year after year, it does not assume you are being a responsible saver. It assumes you are dead. It assumes you passed away, or you moved and forgot the account existed. And the law says that banks cannot just keep dead people's money forever. They are required to turn it over to the state treasury. The trap is that the system cannot tell the difference between a forgotten account and a senior who is simply leaving their money alone on purpose. Your responsible saving looks exactly like abandonment to a machine. So, if leaving your money alone is exactly what puts it in danger, the next question you should be asking yourself is, how long do I actually have? How long can my money sit quietly before the government sweeps in and takes it? This is where the law gets aggressive, and it is why so many seniors are caught completely off guard. Every single state has what is called an escheatment law, or unclaimed property law, and those laws have a ticking clock built right into them. In the past, banks used to wait 7, maybe 10 years before declaring an account abandoned. That gave you plenty of time. But in 2026, states are hungry for cash. They realize that unclaimed property is a massive pool of money they can use to balance their state budgets. So, state after state has quietly shortened the timeline. Today, in the majority of the country, the countdown to confiscation is just 3 to 5 years. 3 years. That is nothing. Think about how fast 3 years go by when you are retired. You put some money aside for a new roof, or you open a small savings account for a grandchild's college fund. You blink, a few holidays pass, the pandemic comes and goes, and suddenly, 3 years have vanished. If you have not proven to the bank that you are still alive and watching that account during that short window, they pack up your cash and wire it to the state treasury. No judge, no court order, just a quiet electronic transfer in the middle of the night. But the scariest part isn't just the short timeline. The scariest part is how the bank actually defines inactivity, because what you think keeps an account active and what the bank's computer thinks are two very different things. You probably assume that as long as the bank has your home address, your money is perfectly safe. But here is the silent tripwire that catches thousands of older Americans every single year: returned mail. Let's say your bank mails you a routine privacy notice or a regular paper statement. Maybe the postman puts it in the wrong mailbox by mistake, or the label gets smudged in the rain, and the envelope gets sent back to the bank marked "Return to Sender." To the bank's automated computer system, that single piece of returned mail is a massive red flag. The algorithm instantly assumes you have moved away or passed away. In many states, that one returned envelope immediately starts the 3-year countdown to seize your savings, even if you never moved a single inch from your kitchen table. Then there is the bank merger trap. Small local community banks are constantly being swallowed up by giant national banks. When that happens, the new bank usually sends you a letter telling you to set up a brand new online login. But if you hate computers, or you just prefer leaving your savings alone, you toss the letter and ignore it. Because you didn't jump through their confusing new digital hoops, the new megabank flags your old account as dormant. Nobody picks up the phone to call you and ask if you are okay. They just start the quiet clock to hand your money over to the state. Now, basic checking and cash accounts are one thing, but what happens to the serious money you purposely locked up for years on end just to earn a higher interest rate? Seniors love certificates of deposit. A CD is practically the definition of a safe, conservative retirement investment. You lock your money away for a year, 3 years, or even 5 years just to guarantee a slightly higher interest rate. The entire point of a CD is that you are absolutely not supposed to touch it. But here is where the modern banking system pulls off a quiet, infuriating betrayal. When your CD reaches the end of its term, most banks simply auto-renew it. They roll your savings right into a brand new CD for another few years. You get a printed notice in the mail, you look at the new interest rate, you nod, and you file that paper away in your desk drawer. You assume everything is perfectly fine. But it is not fine. Under the law in many states, an automatic renewal generated by a bank's computer system does absolutely nothing to prove that you are still alive. Because you did not pick up the phone, sign a new piece of physical paper, or actively log into a website to confirm that renewal, the government considers your silence as proof of abandonment. So, here is the nightmare scenario that happens to seniors every day. You lock your money in a 5-year CD. The bank auto-renews it. A few years into that second term, the state's abandonment clock runs out. The bank literally breaks your CD, sometimes charging a heavy early withdrawal penalty against your own money, and ships the remaining balance straight to the state treasury. They punish you for doing exactly what the product was designed to do. And if you think losing a digital CD is terrifying, wait until you hear what the bank is legally allowed to do to the physical family items sitting inside their vault. It is one thing to lose numbers on a computer screen. But what I am about to tell you next is the single most heartbreaking part of my job, because it involves the physical things you can actually touch. Let's talk about your safe deposit box. If you are like most seniors, you have a small metal box sitting inside a bank vault right now. Inside it are the things that actually matter. Your grandmother's wedding ring, your original property deeds, your will, or a rare coin collection you intend to leave to your grandchildren. You set up automatic payments from your checking account to cover the annual rental fee. Every January, $30 quietly leaves your account. Because that bill is being paid on time like clockwork, you assume the box and everything inside it is perfectly safe. But here is the trap inside the trap. The bank does not care that the fee is being paid. For a safe deposit box, state law looks at physical visits. If you do not physically walk into that local branch, show your ID, sign the little paper index card, and physically open that metal box for 3 to 5 years, the bank legally declares it abandoned. And what happens next is a complete nightmare. The bank hires a locksmith. They walk into the vault and they literally drill the lock right off your box. They pull out your family's most private, precious heirlooms, put them in a bag, and ship them straight to the state government. Then, the state puts your family history up for a public auction. They sell your grandfather's vintage watch to a complete stranger. They melt down the gold jewelry. They keep the cash value and deposit it into the state treasury. Once that hammer falls, you can never, ever get the actual items back. To show you what this looks like in the real world, let me tell you about a woman named Eleanor, and what happened when she finally tried to fight the system to get her own money back. Eleanor was a 74-year-old widow living outside of Chicago. When her husband passed away, she sold his old truck and put the $14,000 straight into a separate savings account. She promised herself she would never touch that money unless it was a true medical emergency. For 4.5 years, she kept that promise. She did not touch a single penny. Then she needed a major dental surgery that her Medicare plan wouldn't fully cover. She went to the bank to withdraw the funds. The teller gave her that exact same blank stare I told you about earlier. The bank had handed her husband's truck money over to the state of Illinois. Now, technically, the state does not keep the money forever. You are legally allowed to claim it back. But nobody warns you about the absolute bureaucratic nightmare of actually trying to pry your own money out of the government's hands. The state treated Eleanor like a criminal trying to commit fraud. Handing them her current driver's license was not enough. The state demanded the original bank statements from a closed account that no longer existed. They demanded utility bills proving that she had lived at an old address from 10 years ago. They required notarized affidavits, birth certificates, and endless confusing paperwork. If she missed a single signature, the state rejected the entire packet, and she had to start over. It took Eleanor 9 exhausting months of fighting with bureaucrats on the phone just to get her own $14,000 back. During those 9 months, she had to put her expensive dental surgery on a high-interest credit card just to survive. Eleanor went through a year of pure hell simply because nobody ever told her how the system really works. But you do not have to be Eleanor. Let me show you the exact 60-second rule that stops this from ever happening to you. Eleanor went through a nightmare, but her story gives us the exact key to beating this system. The bank's computer algorithm is blind. It is only looking for one thing: a financial heartbeat. A pulse that proves a living, breathing human is still on the other end of that account. And you can manufacture that heartbeat in about 60 seconds, once a year, directly from your kitchen table. Here is the exact rule you must follow to make your accounts completely invisible to the state's sweep. Once every 12 months, you must take one deliberate, documented action on every single account you own. If you have a savings account or a checking account you rarely use, do not just look at the paper statement. That does not count. Instead, log into the bank's website or app. Logging in creates a digital timestamp that proves you are alive. If you hate computers, pick up the phone, call the customer service number on the back of your debit card, and simply ask the representative to check your balance. Make sure they note in the computer that you called. If you want the most bulletproof method of all, do this. Transfer exactly $1 from your checking account into your savings account. A physical movement of money is the strongest financial heartbeat there is. The computer sees that $1 transfer and immediately resets the 3-year abandonment clock back to absolute zero. For your certificates of deposit, when that automatic renewal notice comes in the mail, do not just file it away. Call your local branch. Tell them out loud, "I see the CD is renewing, and I approve it." That simple phone call is your proof of life. And for that safe deposit box? Once a year, walk into the branch, sign the little paper index card, and open the box. You do not even have to take anything out. Just sign the card. That signature is your shield. You now know exactly how to protect the money you currently have. But what about the money you might have already lost without even realizing it? Right now, as you watch this video, there is a very real chance that the state government is already holding money that belongs to you. I am not just talking about old bank accounts. The state sweeps up uncashed utility deposits, forgotten life insurance payouts, old payroll checks, and even stock dividends that got lost in the mail. Billions of dollars are sitting in state treasuries right now, waiting for seniors to claim them. So, here is exactly how you hunt down your missing money today, without leaving your house. There is an official national database run by the states themselves. It is called missingmoney.com, and it is backed by the National Association of Unclaimed Property Administrators. You simply type in your name in the state you live in, and the system searches the government vaults for any money attached to your identity. If you changed your name when you got married, or if you have lived in 3 different states over your lifetime, search every single one of those names and every single one of those states. You would be shocked by what falls out of the woodwork. I have seen widows find thousands of dollars from an old insurance policy their husband bought 40 years ago and simply forgot about. But here is the critical warning, and you must listen to this carefully. Because there is so much money sitting out there, an entire industry of scammers has sprung up to prey on seniors. You will get letters or phone calls from official-sounding companies called asset locators or property recovery agents. They will tell you they found your missing money, and they will offer to get it back for you if you agree to pay them a 10 or 20% fee. Throw that letter in the trash. Hang up the phone. You never ever have to pay a percentage of your own money to get it back. The official government websites are completely free to use. Claiming your money is free. Now, let me bring all of these protections together into 3 absolute rules that every senior must follow. To make sure no government agency ever quietly confiscates a single dime of your hard-earned retirement, you need to build a permanent fortress around your savings. And you do that by following these 3 absolute rules of protection. Rule number 1. Commit to the annual touch. You now know that silence is the most dangerous thing you can do with your money. So, pick one day every single year, maybe your birthday or the week of Thanksgiving, and make it your official financial heartbeat day. Log into your accounts, move one single dollar between your checking and your savings, and physically open your safe deposit box. That one day of effort buys you a full year of absolute immunity from the state. Rule number 2. Consolidate the clutter. Over a lifetime of working and saving, it is incredibly easy to end up with 5 or 6 different accounts scattered across different local banks and credit unions. A small CD here, an old holiday savings account there. Every single account you ignore is another ticking clock. Do yourself and your family a massive favor this month. Close the tiny, forgotten accounts. Move that money into your main bank. The fewer accounts you have to watch, the harder it is for the government to quietly sweep one away while you are not looking. Rule number 3. Name your beneficiaries today. This is the ultimate shield. Almost every bank allows you to add a payable on death or transfer on death designation to your accounts. It costs nothing to set up. If you suddenly pass away, an account without a clear beneficiary gets frozen, goes through the painful probate process, and if no one finds it in time, it gets handed straight to the state treasury. But if you have a named beneficiary on file, that money bypasses the state entirely and goes directly to your children or your grandchildren, exactly where it belongs. You worked for 40, maybe 50 years to build your savings. You skipped vacations, you lived on a budget, and you paid your taxes. Do not let a blind computer algorithm hand your legacy over to a state government just because you were quietly leaving your money alone. Take back control of your accounts today. Make that $1 transfer. Check the missing money database. Build your fortress. If this video opened your eyes or reminded you of an account you haven't looked at in a while, do me one massive favor. Send this video to just one friend or family member over the age of 65. The bank is never going to call them and warn them about this trap. You might be the only person who does. Hit the subscribe button, turn on the bell so you don't miss the next warning, and I will see you in the next video.